If you go to a bank for a loan, in essence, they're investing in you, right? It's not ownership, but it's a loan, right? If you fail, they're going to fail. If you want that bank to invest financially into you, you need to invest some time at the front end. And that is just a game changer. This is why I don't think AI will replace community bankers.
All right, in today's episode on Data and Confused, we're going to be talking about money. And money in modern society means that there's going to be a bank involved in some way, shape, or form. So I'm joined today by Walt Postlewait, who has a lot of experience in banking. So, Walt, please tell our audience a little about yourself and what modern banking is about today.
Excellent. Thank you, Glenn, and thanks for having me on your show. So, I'm going to date myself a little bit. Banking kind of chose me out of college back in 1991. And so I have seen just a few changes in banking. What I would say, there's been three significant changes during 30 plus years that I've been in the industry. The first was deregulation. When I started in banking, each bank, you may have had common names, but each state was its own entity. Systems were separate, governance was separate. Sometimes it was very confusing because you might live in Oregon and travel to Nevada and go to the same name bank, but literally you couldn't transact because it was literally a different bank. Those kind of changed in the early 2000s. Obviously, there was a big change in 2008 with the housing crisis and just the debt crisis in general. What came out of that was significant changes in regulation. We can talk more about regulators and how often that banking in general is a fairly rigid industry. So it is slow to change and adopt to change. Regulators and those agencies are even more rigid, and it takes longer. And usually it takes some sort of crisis or an event. And that's what we had with 2008. And so there was another significant change that impacted, me as a banker and you as a bank client customer. And then I would say there was this other change which is a little bit softer, and that's been happening over the last 5 years or so. Technology certainly is fueling that. Most people now have a mobile app for their banking. Checks no longer pass from one bank to the other. It's all been digitalized. So it's just data and information that's transferred now. And this whole idea that brick and mortar banks may go away. They've been talking about that for a good decade now. I don't think they're ever going to go like fully away, but obviously mobile banking is changing how most individuals deal with their bank. I would say that my background is more focused on the commercial side. I've been pretty much exclusively on commercial banking since the year 2000. I have spent a little more than a decade in the community development finance institution space, CDFIs, which I hope we have a chance to talk about because I think they're incredibly important and valuable for the small business owners who are needing capital to expand or increase their business. But I would say the CDFI industry is just too well kept a secret. They exist. They're in all 50 states, but people just don't know about them because they tend to be small and they're nonprofit, and you're not turning on the TV and seeing ads for them. But it's been an interesting arc on the last 30 years on how some of these changes have impacted the consumer.
Yeah, I'm sure, just with the advent of the internet and making things
Mhm,
more electronic and all of that, you've kind of lived through that whole cycle of things. And now we have AI. And then
mhm.
I guess I'll throw a fourth thing into there as well, which is COVID, that I think
Oh yeah.
probably impacted a lot of businesses. For good or bad, maybe businesses were able to get loans that they may have otherwise not been able to get during the COVID period. But let's
Yeah.
go back to 2008. And I can't believe it's been as long as it's been now. It's 17, 18 years, right, since that crisis happened. But, they made a movie about it, right? It's kind of become sort of a mythology now at this point. But I feel like from like the consumer standpoint, there was a big loss of trust, of just like trusting the whole system from both the government and the banking side. So, like, can we just talk a little about 2008 more? Like, what went wrong? Like, how did we get, was it too much deregulation? Were people not paying attention? Was there just a ridiculous amount of fraud? Like how did we get, how did it get so bad?
Yeah, it is a great movie. This is going to sound pretty cliche-ish, but I think greed and chasing stock prices really led to it. That whole buildup of the 2000s, there was a lot of growth. We also had, the tech growth and the tech bubble that happened, a little bit before then. Money was cheap. There was a lot of expansion. A lot of people had cash that they were throwing around, and it was cheap and easy to borrow.
So when you say money was cheap, like what made the money cheap?
Fiscal policy of the Federal Reserve.
So is that
When
like making interest rates low? Because
Yes,
we know the Federal Reserve controls that. They're trying to, my
yes.
understanding is they're trying to manage inflation as well. So if inflation is in check, then they lower the interest rates and they want growth, but not too much growth. But for a period of time there, it seemed like there was really just like it was great low interest
Oh,
rates
yeah.
and yeah.
Yes, starting, I would say probably around 2002 and on up until COVID certainly had an impact, and we can talk a little bit more about the financial benefits that the Feds put out there and how that did impact inflation and cause some ripple effects. But when I started banking in 91, money market accounts were paying 7.5, 8%. We spent 2 decades where interest rates, you would earn on a savings or a money market account less than 1%. I can remember still vividly, this would have been back in 2001, talking with a client, and he was talking to me about whether or not he should refinance his house, and he was just really waiting for those rates to come down, and his rate was 5.25. And I'm telling him, well, historically, we're at a historic low. I think odds of it going up are much greater than the rates coming further down for 30-year mortgages. And well, I was wrong. They came all the way down into the threes. I think some people probably saw high twos. So money got cheap. And there's a lot of deregulation during that time. And I'm going to say something that's probably a little controversial, but not everybody should own a home. And with the money being cheap, with lenders not being regulated, that was the birth of this, B paper. And you could just state an income and
Ugh.
you could then qualify for a loan. You didn't have to back it up. If you had a credit score that was high enough, stated income, you're in. To help get people in, they were doing ARMs, variable rate loans that's fixed for a few years really low, but then the rates are going to start adjusting. So a lot of people got pinched on that when the rates adjusted at 3 years, 5 years, 7 years. I can remember I did mortgage lending for a time, and I chose to get out because I'm a pretty pragmatic kind of guy. I like to be able to explain things. And I was working with this couple. They were friends of my sister-in-law. He had gotten his bachelor's degree. Both he and her got their bachelor's degree. He was supporting her as she went and got her master's, and then she went to work with a master's degree. He then started law school, and he was just finished up his first year of law school. He was clerking for a firm. And because he did not have 2 years of experience, he was only 1 year in law school, we couldn't use his income. And he had a great clerking job. It was going to carry on as the new school year started, but we couldn't use his income because it wasn't at least 2 years. Because she had a high enough credit score, she was able to do a stated income. And after the loan got declined because of his, not seasoned employment, we went back, resubmitted with just her, and got her approved, right? Same house, same loan amount, but now it's just one person instead of two people. doesn't make sense, right? Everybody knows that if you're going to have a loan, why not have two sources of income for the repayment instead of just one? So that literally was the last mortgage loan I did. And this was pre crisis because it didn't make sense. And so, what I think led up to the crisis 2008 is you had a lot of this type of lending that it was all about making the applicant fit the boxes because whoever originated that loan, whoever that first mortgage, who put up that money, sold it and went to other people. I think it's pretty well documented that what led to this buildup was what was the invent of the credit risk swap when and the story has it came about in a hotel room at a bankers conference with some banks. I think it was JP Morgan, Bank of America, and somebody else sitting around a table trying to figure out how to drive more money. And they realized that if they can do these loans but create a market for a third party to buy the risk, it doesn't matter because you're offloading the risk to to a secondary market and let that market figure it out. And so it was money trying to create more money, and at the end of the day, it was driving stock prices.
Yeah. So like Goldman Sachs paid the price, I guess, but these other, JP Morgan, Bank of America, they all seem like they're doing pretty well these days. And I don't know that they really paid the price or paid a penalty for this. Maybe they did. Maybe they had some losses for a period of time, but like what was the fallout in the end for these bigger banks?
I'm not sure I can give you a good answer there, Glenn. I don't think there were ramifications. I certainly don't think heads rolled. I certainly don't think the people who created this situation were held accountable in any fashion. I think they still got their bonuses and paid out on their stocks. Some may have retired a little bit earlier than they thought, but or had intended. But it's the yous and me's that paid the price out of that. I think some good things have happened. They certainly have now changed the way mortgage lending is handled. They certainly have, certainly right afterwards, made sure that documentation was there and people's income was really what it they were stating it was because you had to document it. But unfortunately, we all have a short memory span, and up until you know COVID has changed things. But I think we started to forget about those lessons, and we did start seeing a lot of lending that probably should not have happened. And then in 2021, 22, with everybody getting bailouts from the federal government, that put more cash in people's pockets, that allowed them to put more down. You can look across the board and there's been significant appreciation of housing across America that coincides with that. So whenever you put more money supply out there, it is going to drive up the prices. It's supply and demand. We learned that even before we get to college.
Yeah. So now let's transfer the conversation over to the commercial side of things.
Mhm.
So this has been, the housing crisis was, as you described and gave the example of that couple, it was like consumers buying houses and
Mhm.
and all of that. So on the commercial side of things, is there a potential for something like that to happen again? I've heard rumblings, I guess, because of COVID, maybe there was some fear that like commercial, maybe not commercial lending in general, but like commercial real estate
Mhm.
may get into trouble and there may be some of the same things. I don't think that that has transpired. What about the commercial side of things?
Yeah, it's a great question. And 2 years ago, there was a lot of conversation about the upcoming commercial real estate implosion because office space has a lot of vacancy. People are now working from home. There has been a bit of a flight from dense urban cores to suburbs and to rural. In some ways, I equate it a little bit to the whole Y2K fear mongering that happened. I was at a community bank during that transition, and we were incredibly anxious about these systems and what would happen when we rolled from 1999 to 2000, and our two-digit, year would, cause the entire financial system to collapse and crash. I think a lot of people made money, consultants and people who came up with the software to, go to a four-digit year. I think those people made some great money,
Right.
and I applaud them. Right, I am a big fan of entrepreneurs who see a niche market, which is often tied to timing, right? You have an opportunity, you have a window of opportunity, and you need to move forward. And then nothing happened, right? So 2 years ago, I was certainly part of that group that was very, very concerned about commercial real estate prices. When you look and you see that these, office buildings are 40, 50, 60% vacant, a lot of big companies had those leases and they couldn't necessarily break those leases very easily. But when those leases mature, then what happens? A building that was appraised at 15 million when the loan was done, commercial real estate is really easy to calculate values because it really is based on the cash flow that's generated. When you look at residential property, it's all emotional. When you look at commercial property, it's all about the income that can be generated. So it's really easy to draw, the arc and say, well, if your revenues drop by 30%, well, the value of that property has now gone down. And I
Okay.
think it was a legitimate concern in the banking world. We haven't seen it manifest itself out completely yet. I was doing some tracking for a different project beginning of this year, and we were seeing that delinquencies were on the rise in most banks, especially in the commercial real estate arena. But somehow banks are fixing this. I think they are rewriting loans. I think, things are beginning to taper off. We have now seen companies saying, no, you must return to the office, or maybe a hybrid work where you get one day at home.
Yeah, we do 3 days ourselves, 3 days in the office and 2 days at home. It's
Yeah,
pretty flexible, but yeah,
yeah,
local tech companies around here, like Amazon, for example, it's like you're back in
yeah,
the office five
exactly.
days,
Yeah,
make it happen. So,
yeah.
yeah,
Yeah, so I think it was a soft landing, as they would
yeah,
say, and we'll see what transpires over the next couple of years. We're still in a volatile market, both with the economy and politically speaking. So we'll just have to see where things go. Traditionally, bankers do not like volatility because bankers are betting on what's coming tomorrow. And if nobody has a crystal ball that's working anymore, it does make it more difficult for businesses to get loans.
yeah. So that's, I guess, the risk management piece there, right? So they're
Yes.
how does that what is the sorcery? What is the magic formula? Are there teams of people that just specialize in risk management? There's, I'm sure, a lot of data that they're looking at, forecasting, but it,
Yeah.
it just kind of seems like there's, it's like a black box and nobody quite understands what's happening. But yeah,
All too
maybe
often.
maybe you could explain that part of it a little bit.
Yeah, yeah. Well, and it varies from types of financial institutions and probably also regionally in the US. So if we were to, put the financial institutions on like a arc, you've got your national banks, you have community banks of varying size, some are regional, some are super regional, others are very local. We've got credit unions that are now doing commercial lending where, what, 6 years ago, something like that, that they couldn't really do commercial lending. And then you've got this other kind of satellite group out there, CDFIs, community development financial institutions. So the way a national bank is going to handle their risk will be in a much broader brush strokes. They're going to look at a lot of macro data. They're really focused on industry concentration. where they've got money concentrated in the US because, that's their scope. And frankly, especially the national banks, because of their size and horsepower, they're looking for more and more ways to generate revenue that is not interest income. And I started with Bank of America. So I tend to kind of focus on them. And I used to teach at a job corps that was in the Portland, Oregon area. I would do a session or a series of sessions for them. And one of the things that I look at is how banking has changed. And like I said, I look at Bank of America where my career started. And when I started, the majority of their income came from the lending that they did. And, on the annual report, the financial statements, that's interest income. When a bank lends money, there is risk associated with that because they know they're not going to get paid back 100% of the time. So if they lend out, say, $500,000 to a business, and after 3 years that business fails, they liquidate the collateral, they do what they can to collect, and they're left with $100,000 loss. It takes a lot of money or a lot of time for them to make that actual core loss up just with interest income or with a loan fee. So these big banks have been really driving the fee income. And I haven't looked probably for a decade, but I'm willing to bet if you looked at Bank of America, I would say probably 65% of their income is now fee based because there's no risk with that. You earn a dollar off of the fee.
Those fees. Stop with all
Yes,
the fees. Yes, I know.
absolutely.
It's ridiculous. I'm waiting
Yeah,
for them because you see these commercials with the Chase guy, and I'm just waiting for Chase to like buy Starbucks or something. So then it's like, is it a bank? Is it a restaurant? They serve
exactly.
coffee. We don't know what it is anymore. But you mentioned community banks, right? And the CDFI. So I had the impression, and please correct me here because I think this is the wrong impression, but I just have the impression that these big banks, these national banks, the Chase, the Bank of America, they're just kind of taking over and pushing everyone else out, and they're forming, not a monopoly, but whatever
Mhm.
it is when you just have a few of them,
Getting too
a,
big to
a,
fail.
a quadopoly, however many there are of them.
Yeah.
But I do see, we have a credit union here that
Mm.
I personally use, but like what are community banks relevant still in going into 2026, and are they going to be relevant in the future, and if so, like how do they fit, what role do they play, and how do they compete against the big guys who are also selling me
Yep.
Starbucks and whatever apparently. So
No, I have a heart for community banks, and if if you are a small business owner, and small business means under 100 employees and under 20 million in annual revenue. If you're a small business, your best relationship would be with a community bank, and probably not a regional or a super regional, somebody in your community, right? That's why it's called a community bank. Yeah, I can tell you part of, the ironic outcome of the 2008 financial crisis is the regulatory laws that have been enacted make it harder and harder for the smaller banks. I'm not going to be a conspiracy theorist and say that's by design, but I don't like the trend that the big banks keep getting bigger and bigger because they keep buying the smaller banks. But we don't have to get on that soapbox. But the community bank, and my first advice to any small business owner is if you do not have a relationship with a bank or a banker, that should be your number one priority for tomorrow morning.
did
You may not need them today,
you
but
hear
if
that, Bank of America? Adios. I'm gonna go. We're gonna go find a community bank now. So what is a CDFI? You mentioned that a couple of times here. So there's a CDFI, which sounds like it's a special kind of bank in
financial
this case.
institution.
Okay, so
And
what is
so
that?
So CDFIs actually came out of the civil rights movement back in the 60s.
Oh, really?
There,
Okay.
yeah, and there was legislation that was passed called the Community Reinvestment Act. It's part of the banking regulations that state that if you're an FDIC regulated bank, you have to reinvest some of your profits into the communities that you make those profits. So that's kind of the lighter fluid that started this industry. CDFIs, you can be a bank and be certified as a CDFI. Most CDFIs are not banks. They're just a loan fund. And the difference is when you say a bank, you're referring to a depository, right? The money that a bank lends, it's not their money. It's your money. It's my money. It's their depositor's money. And because they're not playing with their own money, they have to be regulated because, if they lose money, they're not losing their own money. They're losing our money. So they have fiduciary responsibility. So that's why they get regulated. CDFIs are not lending depositors money. They actually
Right.
fundraise. Most of their money, I would say, I work for a really large regional CDFI in Oregon and Washington,
Okay.
and I would say about 35-40% of our balance sheet was bank debt from all the national banks, because all
Hmm.
these national banks, again, CRA, they have to reinvest in these communities. Well, they can't do
Okay.
really risky loans because they're regulated. So they lend money to a CDFI at a lower interest rate, right? That it's not free money. We're helping them out, but
Right.
they're bringing down the rate for the CDFI, but not that much. And then the CDFI goes and makes the loan, and
Mhm.
then it recycles, right? As the CDFI gets paid back, then they're able to pay back the national banks. There's a lot of foundations out there that support CDFIs, and I'd say that's another 35-40% of their balance sheet and the capital they can lend, and the rest is just earned over time, and it's their net assets, really. So CDFIs, because they're not regulated, they're able to do lending that a bank can't. So the ideal client for a CDFI is a business that's looking to expand or do something but needs a loan. They're not bankable because last 2 or 3 years, their cash flow doesn't support the amount of money that they're trying to borrow today. But the business isn't borrowing money to stay at that same cash flow it has had historically. They're borrowing the money so they can expand and increase the cash flow that they're generating. That's
Sure.
why they're taking this risk. So what
Yeah.
CDFIs are really good at doing, and I would say this is really where they separate themselves from a bank. A bank tends to look in the rearview mirror. What have you
Mhm.
done the last 3 years, and we're going to approve your loan based on that.
Right.
CDFIs look at the projections, your performa, right? So you're the business owner, you want to buy this money, you need to be able to articulate what you're going to do with that money and
Mhm.
how will that then increase your cash flow. And we look at
Right.
your cash flow for the next few years, and if you are making enough money to repay that loan. And in our conversation I go, Glenn, he's got a good sound business plan. I believe he has the ability to execute this business plan. I can now approve you for a loan. And because it's speculative, a CDFI can approve that because they're
Right.
not regulated.
Gotcha.
Over time, you're successful 3-5 years. Now we get you over to the banks where now you can get into a little less expensive money. CDFI money is a little bit more expensive because their cost of fund is more, because they have to pay the big national banks more than what a bank is paying on deposits. But the goal is to get that small business handed off to a good traditional financial institution, either a bank or a credit union.
Yeah, I when I started my business, I broke every rule and did everything that you're not supposed to do. So, because we are doing like hosting and cloud infrastructure and stuff like that, it was like there's a lot of stuff I had to buy. So,
Yeah.
just max out all the credit cards. That's literally what I did. Got a bunch of credit cards, maxed them out, bought all this equipment. Absolutely bonkers to do that. So I don't recommend doing that.
No,
And then
but you do what you have to do.
wait, I did what I had to do, and
Yeah.
we made it work. And then later on, it was actually during the 2008 financial crisis. One of our biggest customers was they worked and they were actually doing mortgage software at the time, and they were our biggest customer in San Diego. And so yeah, they will call it restructured after that happened. And part of that restructuring is we got ixnayed. Yeah. So I had to go through this period here of like just keeping the business afloat during that period and then turn to what I call loan sharks. So these companies out there that you can get, these wacky loans where you have to like repay weekly.
Yep.
And if you don't pay, whatever, Guido's going to come to your door and break your kneecaps or something. It wasn't like that, but it felt like it. But like the interest rate I paid was just astronomical and it was ridiculous. But I did what I had to do to get through that. And then since then, like we're doing okay now. We went through a period I was trying to get SBA loans.
Mm.
Those were always difficult to do for some reason, and we couldn't. I think we got a little bit, but it was never really anything substantial. And so we've just, we had a loan from like an angel
Mm.
person that we
Mhm.
knew at one period of time. So we've never really had a, to go through a CDFI or a bank loan or
Yeah.
something like that. But it would be nice to know. It's like that's a resource you can turn to that you would have
Yeah.
reasonable rates. Okay, I know I'm going to
Mhm.
pay a little bit more,
A little more.
but it's not the same as putting it on a credit card or doing
No.
some of the other crazy stuff we did. So yeah.
A kind of fun story, real life example. The lenders that you just described, and you call them loan sharks. We did a lot of refinancing out of the credit card merchant service loans, where if you're a business like a restaurant and you swipe a lot, they come, hey, we can approve you in 24 hours. We'll get you that money, but then they're taking money out daily or weekly. So we saved a business. It was a restaurant that needed some capital. They went that route. It was destroying their cash flow. They came to the CDFI I was working at, and we refinanced them out of that. And then this CFI I worked at, we would do all staff meetings, usually 2 or 3 times a year, where we, and because we had 8 offices through Oregon and Washington, and so we'd bring everybody together so we could work it better as a team, get training, learn who our colleagues were. We'd often bring a business in to talk to us about their business and what their loan from us meant. Kid you not, this restaurant that we did this refinancing, we brought them in. The lender, introduced them, was talking, and the business owner was talking about the situation they were in and what this refinance meant for him. And his phone rang, and he kind of looked at it and he said, "And that's them calling right now." So
The
he
loan
was
sharks
telling us
calling.
how we
Yeah.
saved his business, and that less than honorable lender was still harassing him, trying to get him to
Yeah.
take another loan. So that's
Yeah.
out there. And as a business owner, you have to be careful because, like I said earlier, opportunities are often time stamped, right? You've got a window of opportunity to execute on that, and you can't wait 3 months for a bank to make a loan decision because your opportunity comes and goes. And
Yeah.
so my biggest complaint with community banks is slowness. It is a manual process usually.
Yeah.
It opens the door to get money, but it can be a slower process because the big banks, they just may look at it as a consumer loan. And if you got a high enough credit score, they'll roll the dice with you. But the other thing that I'm a huge complaint about my industry is the slow no. I was working with a remodel, a hotel and restaurant, and they were working with a lender for 6 months. And that lender finally came back and said, "No, we're not going to do this loan. We don't want to take on any more hospitality loans." The loan didn't change from where they started 6 months ago. If they didn't want to do any more hotel loans, tell that up front, right? Because it's that slow no that, in my opinion, gives bankers a bad reputation.
Yeah. Yeah. There's a lot of things I think that give bankers a bad
Well,
reputation.
yeah,
At least from
there's a
my
few out there.
standpoint, I'm super jaded. Like having gone through all the stuff I've gone through to get my business to the point where it is now, I'm
Mhm.
super jaded with the banking industry in general. Like I have, you know, a very low opinion of them. I haven't heard of CDFIs, so maybe I'll look at that piece.
Yeah.
And the crazy part here, I'm not just saying this just to complain, although don't get me wrong, I do like my share of complaining, but like I don't know what the exact statistics are, but small business employs, I don't know, 2/3 of the economy.
Yeah, I
Like
think
it's a
it's
big part of
80%.
the
Yeah,
economy.
it is.
And we're sometimes some small businesses are just being strangled unnecessarily. It just feels like there should be more something, more scaffolding, more things in place, more resources available to people that small businesses help them succeed. Like this is where future growth is going to come from, is from entrepreneurs, getting out and doing their thing. Let's
Absolutely.
if we can help small businesses, but no, it just seems like it's such a minefield instead.
It is, and that's
Yeah,
why I say if you're a business owner and you do not have a relationship with a bank or a banker or a credit union,
yeah.
you need to start that. And it doesn't have to be asking for money. It can be, I'd like to meet with the loan officer, just talk about the bank. What kind of services do you provide? I've got, deposit accounts I can bring over. I don't need a loan today, but I may in the future, and I want a relationship.
Yeah, so you keep using the word relationship. So what does that really mean at the end of the day? Does that mean like, they like me? They know they can see my books now, basically. Not my books, but they know what my cash flow is like because I've been depositing into the system. And so the relationship, I'm putting air quotes here, is just about them knowing how big my business is and what it's like? I mean, is there an actual relationship where it's just like, "Hey, Walt, good to know you. I'm a stand-up guy, and you seem like you're not just a loan shark type person, so we have a an actual relationship." I mean, what what do you mean when you say that word?
And and Glenn, that's an excellent question because everybody throws around that word relationship these days. You want somebody at your financial institution, preferably, tellers are awesome. I started as a teller and it launched me into a wonderful career that provided for, me and my family. But but as good as the tellers are, you want to know a branch manager, commercial lender, and we're looking at this from, a business owner standpoint.
Yeah.
And when you walk in, you want somebody who looks up from their desk and goes, "Hey, Glenn," right? They because when it comes to lending, and we can talk about AI, and because you had asked, our community banks going to go away because of AI, and the short answer is I don't think so. But you want somebody who knows you because character is still and always will be one of the most important credit aspects. That's one of the four C's, right?
No, I'm not just a number.
You're not a number because I'm betting on you, right? If and this goes more again for community banks, CDFIs, credit unions, national banks. If you're looking for a loan under $100,000, or it may have been gone up to like 250,000 now.
So these bank managers have actual power. They have influence. It's not just it's like, all right, I they go to their boss, I guess, whoever makes the action. I don't know if they're making the actual decision, but I imagine they have to go like pitch it to their team or their boss and say, "Hey, I think we should loan Glenn $1 million. He's great. Here's why. Here's all the reasons why Glenn needs $1 million. And I'm going to make a personal pitch and vouch for him, basically."
Yes.
They have that power to do that. That's a
That's
thing.
loan committee. So wait,
Okay.
so again, each bank, each financial institution is going to be a little different. Some financial institutions, lenders have signing authority, right? So if your loan's only 50,000, I can approve that and sign that myself, kind of a thing. The bigger the loan, the more people who have to sign off on it. But what you are looking for with your bank, your financial institution is your champion. Who is going to talk on your behalf and convince other people to bet on you, right? Bet on Glenn. This is why I believe he's going to pay us back, and look at the good that will come out of, the broader community because of Glenn's work.
Yeah.
That is what you seek.
He
And
paid
it's
his rent. Look at him paying his rent, and he expanded his office.
Yep.
and he forced all of his employees to come in 3 days a week. What a meanie. Yeah.
Oh, no. No,
We
but that's what you need in
yeah.
today's environment, and, everybody, or I should say most people still enjoy a cup of coffee in the morning, right? So as you're yeah, so it's an investment of time, right? So if you go to a bank for a loan, in essence, they're investing in you, right? It's not ownership, but it's a loan, right? If you fail, they're gonna fail. So if you want that bank to invest financially into you, you need to invest some time at the front end. And that is just a game changer. And then if we can pivot, this is why I don't think AI will replace community bankers. And
I'm gonna quote you on that, Walt. We're gonna
please,
come back and see if that holds
I
true or
like that.
not. So,
Revisit.
yeah.
Yeah,
Yeah. So,
because
because
our
it seems like AI is inevitably going to crunch the numbers, shall we say,
sure.
and it's gonna have its own recommendation, its own
Hmm.
score, its own whatever, that, it's gonna be a factor in that. And I don't know if at the end of the day, if you like have okay, let's just let's play this out here.
Yes,
So
I
let's
like that.
just say, for example, we have Bank A that has only AI bankers and Bank B, which has human bankers, or maybe even human bankers augmented by AI. At the end of the day, they're just going basically just on data. Bank A is. It's just like, we're just going to do it based on data alone. And the other one would be based on character and maybe some of these other soft skills and stuff.
Mhm.
If the AI ends up getting better data, and it's just like, hey, we made another $10,000 or 50 or $100,000, whatever it is, just because we were able to crunch the numbers and pick the winners a little bit better.
But don't stop there, because AI doesn't have to just rely on financial figures. Let's talk about AI going and scrubbing your social media. Let's talk about using the cameras that are now prevalent throughout all the the cities and communities, and figuring out what your travel patterns are. Tapping into Kroger in your card, and figuring out what you buy, and how much beer and wine you. So all AI technically could look at all of that. But
Right.
in what a month and a half ago, you had Walter Boyd on, right?
Mhm.
And he was talking about the bias that is part of AI.
Yeah,
Until AI becomes awake, I think it's really easy to skew data. We see it
sure.
all of the time. I
Correlation, yeah. We've
yeah,
determined
right,
that we looked at the stuff you buy at the grocery store, and we've determined the only people that are worthwhile to give a loan to are people that buy Colgate toothpaste or something like that. So
right.
because whatever, the data showed for a period of time, all those Colgate toothpaste buyers were the ones that paid their loan back. So it may work for a period of time. Yeah, I guess I don't know.
But this is the
It's a
kicker,
slippery
Glenn.
slope.
And
Tell me the kicker. Yeah.
this is why I feel fairly confident that I'm, with my statement of, I don't think AI replaces the community banker, because what we just did is we just talked about how a bank would use AI to approve your loan.
Mhm.
There are bad operators out there. Let's
Yeah.
talk about AI being used to defraud the bank. So
Okay.
if I am a bad person, whether I'm here or in a different country even,
Yep.
I can come up with profiles, knowing that AI is
Mm.
looking at these certain things. I
Yeah.
can create a complete false person narrative. I can even produce video now, right? That
Yeah.
you can't tell is
Deepfakes.
AI
Yep.
generated,
Yep.
right?
Sure. Yep.
So how does AI figure that out? And to me, so 10 years ago, right? 15 years ago, whenever social media started rolling out and everybody started walking around like this, looking at their phones, we talked about society and how society is going to get closed off, and how people aren't going to interact. And young people, I've got 3 kids, all 28 and younger, and they grew up with media. And we all talked about nobody will communicate and nobody will interact with each other anymore. We'll all do it through a screen. And I think that was correct 15 years ago. What AI has done, I was at Tech, which is an Alabama-based entrepreneurial venture capital conference. And at Tech, the one of the speakers that I listened to, fascinating guy, kind of a futurist, he talked about we're not that far away where the only way we will know that you are you and me is me is in a face-to-face physical environment where we can see and touch each other, because AI is getting that good and it's on this, exponential improvement curve. You know, I I wouldn't, you know, there's probably AI out there that could be a guest on a podcast
Oh, I
and
have a
the
friend that's
host.
already done that. Yeah, I have a
Yeah,
friend who
so,
plays an AI.
who's to
He
say
actually
I'm
had a
not
whole
an
team
AI
of
generated.
guests.
Yeah.
Yeah, he had a panel of AI generated people. It was hilarious. Yeah.
Yeah. So and I think right now AI is not quite advanced enough to pull that off, but it's not going to be that far. We used to say a picture's worth 1,000 words. Well, now a picture's worth is worthless. It doesn't represent words because you have no way of really proving it's authentic
Right.
picture. And if we want to, keep going down this rabbit hole, what about the criminal justice system, right? We used to rely on witnesses and being having physical evidence. Well, now who's to say that physical evidence can't be created by AI and nobody knows about it? Last weekend over Thanksgiving, my wife and I watched the old Sandra Bullock movie, The Net. And, that came out, what, 25 years ago or something like that, 20 years. And we've learned nothing, right? Because the premise is, she winds up being given a file of data. There's a back door that allows the access to all of these government and everybody's system, and she's given stumbles across it, and then the bad people are after her and are able to go in to the computer databases and change her identity, give her a rap sheet, and all this. And, you know, and we haven't learned, right? That's more real today than
Yeah.
it was when that movie came out. And so again, I think that is why the community banker will not be replaced. It will
Right.
be augmented by AI. AI is here to stay. Yeah, I kind of joke that I was traditionally, right? I already said banking tends to be fairly rigid. I was a slow adopter on a few major things. Back in the day when I was in a branch, I was a suit and tie kind of guy. And
Mhm.
then, the event of casual Fridays happened and you were supposed to dress down on Fridays. I did it for years because when you go in and you see a doctor, you want to
Yeah.
see the white coat. If
Yeah.
you come in to talk to your banker, you want to see the tie. That was my philosophy. But then, that was momentum. And now you walk into branches and people
And
are
now it's just
walking around.
Hawaiian shirts
Oh
everywhere.
yeah.
Yeah, so
Yeah, yeah, t-shirts and jeans, right? And then with COVID, we've talked about COVID a little bit. I was one of the last people to leave the office. I loved my office. I had a great desk, I had a great setup. The
yeah.
view was out over the Columbia River. It was just really comfortable space. But the offices were closed, right? Decisions were made that everybody was to work at home. I wound up setting up an office at home. I'm a huge fan of multiple screens, right? Two, three screens. And anyway, I have now been remote or semi-hybrid for 5 years, and I have learned the tricks of the trade where I am actually more productive in a remote setting than I am at an office setting. And I still can get the water cooler talks in. I still, reach out and talk to people and kind of build that. So with AI, I've been really trying to understand it from a business perspective because I know that's my tendency to be a late adopter, and I don't think AI is going anywhere. I kind of joke our middleist, she's a computer science major or a degree, and she had an internship, and her employer was the US Air Force. And she was doing coding at a US Air Force base in upstate New York. And we joked that she's creating Skynet. And she might have been because she can't talk about the work she was doing. But right. So AI is here to stay. I think the opportunities, and you've had speakers talk about this before, is how do we use AI to make our work more productive? How do we make it easier and better? Two examples. I've always used Excel. Excel is incredibly powerful. I've used it, for 20 plus years, but 25 plus years. I know maybe 10% of what it can do. But now when I'm looking at this huge spreadsheet, I jump over to Abacus is the AI platform I use. I tell it what I'm trying to do. I can even tell it what tabs the data is in and what rows and columns. And it will just go, it'll ask a couple of questions, and then boom, it gives me a formula. I copy that formula, drop it in my thing, and away we go. And it's a huge time savings. And this dovetails into a project software platform for credit risk management for commercial loan portfolios that I've developed. The team I'm working with is using AI assisted coding, and it's allowing a bloke like me, a very average guy, to create this incredible platform that's going to be highly usable and very valuable to commercial lenders. I couldn't have done this 12 months ago because I don't have $1 million in my back pocket to do it. I can now do it for, 50, 75,000. So it's how do we use AI to bring down and give normal people access to do more. And that's where I think I get excited about AI. I know there's a lot of doomsayers and, you know, probably people watching Terminator more than ever before, but I think where we are today is a little wild, wild west. Don't get me wrong, but I get excited about how using AI tools makes me better, faster, more valuable, and has allowed me to create this whole platform and launch a whole business where that would have been a bridge too far even 12 months ago.
Yeah, and I think your story is can be repeated,
Mhm.
thousands, tens of thousands or more times. Like I think I hear this from many people that they're learning and it's a learning curve, right? Everyone's going to have to go through this learning curve of whether it's a code. Yeah, it depends on the project too,
Right.
right? To maybe you start
Mhm.
small on something, but yeah, I mean there is a lot it can do for sure. And if you can plug it into some kind of data, like you were talking about Excel, if
Right.
you have it in some kind of format that's easy for it to consume and absorb and process for you, so much the better. I think one thing I want to bring back and ask you a little bit about is about fraud. And so there's been, I just noticed kind of being more on the cybersecurity side of things that the issue of fraud is seems to be getting worse. And what I mean by that is like there's whole compounds, in different parts of the world where people just have full-time jobs where they just call out to people, typically, more vulnerable people, elderly people, that kind of thing, and through various ruses convince them to empty their bank accounts, right? And
Right.
things have reached a crisis level when Jason Statham makes a movie about it, right? So he made this
Exactly.
movie called The
Yep.
Beekeeper or something like that.
Yep.
But the premise of the movie was somebody in his life that he loved got scammed in this way, lost all of their money, and so he then came in and had to kick ass and take names to find these scammers. But for real, like from a fraud perspective, like this is now huge business for these fraudsters. I don't know that they're quite sophisticated enough, but I'm sure it's to use AI, but I'm sure it's coming and doing things like maybe synthesizing a voice, like you talked
Yes.
about, being able to make pictures. They can also synthesize a voice so it
Mhm.
sounds like a loved one or something like that. Sounds like something that's convincing. What can be done, or is there anything you see being done from the banker perspective that can put in better controls or ways to protect, especially the elderly, from being scammed in this way? Because if there is stuff like that happening, I'm not really seeing it.
And I think this is another use of AI from a defensive means. Unfortunately, I do think more and more AI can be used for offensive fraud, execution. You said, a room full of people calling, elderly people. It may just be one person now who's got, six AI bots who are actually making those calls. So where I've seen AI used the most right now in financial institutions is around the fraud detection. And there's patterns that we all have, and AI can certainly digest what these patterns are. And if there's a break in that pattern, it can slow the process down, it can flag the transaction, it can help, get have somebody call grandma and say, "Hey, did you really want to do this?" It's not where I wish it were. I could spend, a whole episode telling you about, the frauds that I've seen. And
Well, tell a good story about one of them first, just to
sure, I've got two, and they're 20 years apart, 25 years apart. So back in the day, this would have been 1994. Again, dating myself. I was working in a branch in downtown Portland, and a person came in with a check to cash. She was writing it to cash and had an Oregon driver's license, right? This was in Oregon, downtown Portland. And something seemed off. So, again, really no computer intervention. This was, all right, this does feel kind of weird. So I was assistant manager at that branch. So we slowed it down, and the person wound up leaving. But what we had found is the woman was shopping downtown at Nordstrom's. Somebody stole her purse, and we had somebody in our branch within 30 minutes with an exact official looking driver's license, right? So now, again, this exponential curve. This happened a few years ago. It was a line of credit. The lender was contacted to do an advance off of this line of credit and send wire proceeds here. I think it happened twice. Well, we were alerted to a problem with that transaction because I think a payment was missed, or somehow, the borrower was reached out to say, "Hey, you owe a payment, or, your balance." And it's like, why? I haven't used it. And so, through technology, because technology was used in this situation, we didn't have like full generative AI at the time, but enough information was known where, the institution was contacted, information was given, monies were wired. And when you hit send on a wire, you don't get it back. And AI it has to be making this more of a problem. But this is where the good guys and the AI on the home team just has to get better and better. And this is where bankers, who, remember, they're fairly a rigid group, really need to have the right CTOs, the chief technology officers, in place to really adopt and move this technology. I think there's enough banks, and I think there's enough. It's a big playing field. So, your bank may not have had a breach, may not have been, invaded by AI trying to pass as a client, but give it time and it will be. So I think bankers have to be very, very proactive here. When and we can all do searches. There is so much information out there on everybody. I don't think it's really that hard to go and look up somebody's social security number, where they were born, what's their mother's maiden name, right? Those were, the security words and codes that, we used for forever. Well, now we have to come up with different mechanisms to do that. But fraud is huge. I had an uncle. I still have an uncle, but he was contacted, and the person at the other end of the phone was saying that it was his granddaughter, and I can't remember all the details, but it was something where she was in an accident and needed money, and can he send, a couple $1,000s here? And he
Right.
was really worried, right? At least he then reached out and started talking to other family members and were like, nope, this is fraud. But people, part of humanity is believing that, you are a good person, and that makes us vulnerable. That's why the bad operators are out there and prey on good people. And yes, Beekeeper, great movie, and I'm glad he kicked ass because, you know, I I it amazes me how much energy and resources bad people put into the fraud that they commit. What if they use those skills and those talents to create something to benefit their community, not to rip people off, right? You know, the pursuit of money, I want more money. I'm trying to make more money. I've helped, people make a lot of money, but money at the end of the day is not the end all be all. We as humans are to have relationships. Again, why I don't think AI is going to put us in closed boxes. We're, we are human. There are, and I don't care if you're in America, if you're, in Suriname, in Republic of Georgia, and I'll even say Russia and China. And I've had the opportunity to travel, and when I am breaking bread with somebody, it's not about politics. We all have the same desire for friendship, for love, and to providing for our loved ones. So, to me, and I could be naive, and I probably am, but that's how I choose to operate and live my life. And I think most people do. Yes, it makes us vulnerable. We do have to, kind of have our safeguards. Yes, we need to have better tools. Yes, I think AI can help defend on that. But at the end of the day, this is where AI stops and where I think humanity wins.
The human element is so important, right? And so whatever you want to call it, whether it's our higher natures, our values, our spiritual
Hmm.
views,
Hmm.
that's really what we're talking about here, right? It is
Yeah,
that, and it's making that connection on a different level. I'm
it
not
is.
just a number. And from the standpoint of the banker, I understand it now a little bit differently than when we first talked about it. It's like, sure, you want to make sure like I'm not a con man and I'm not running a con on you. You find out we break bread, you find out over time who I am, what I'm about, what my values are, what my beliefs are. And you see that. We get that human connection. And we kind of tick that little box and saying good person, not going to scam us sort of thing, right? I think that that is super important. I just worry about, you know, th- the elderly not able to have those connections, to have those relationships with these institutions that are controlling their livelihoods, and how do we protect them? There isn't, I don't know if there's a financial incentive. I mean, does anything bad happen? I wouldn't necessarily want something bad to happen, but like nothing bad happens to the bank if grandma gets defrauded, right? It's just the grandma, whatever. They have less money in the case now, and it's everyone feels bad about it, but like the bottom line doesn't change really for the bank. And so I don't know that having a financial penalty for allowing too much fraud is the way to go. I mean, nobody wants it to happen, but like, how do we protect grandma?
Well, and first and foremost, it is not unusual when there's a case of fraud for a bank to take the hit and cover it depending on how the fraud was created. So, like in the case of that loan client, obviously the financial institution took the hit, right? Was not there. A long time ago, again, when I was in the branch networks, there was an older lady who was notorious for being scammed, right? Somebody would call her, give her, the sob story. You know, I'm a I'm the prince in Nigeria and trying to get to the US. And we stepped in more than one time when she came in to send money and told her no. We had to get the family involved. The FBI got involved. But unfortunately, in her case, she was so passionate
Yeah.
about this belief that she needed to help and she was going to get this financial return. She actually left our bank, opened up a bank somewhere else who didn't know the situation,
Mm.
so she could send
Oh
money.
my
So,
goodness.
so
Yeah.
I don't
Yeah,
have
I
a good
mean, you can't
answer.
protect people from themselves at the end of
Yeah,
the day, but it's just I think there needs to be, and whether it's AI to the rescue or, a chief technology officer coming
yeah.
in and just putting in, I don't know, two-factor authentication, just some other things in place to kind of, make it.
But that makes it harder because 'cause you're talking about
I know.
technology, right? I've
Yeah,
got
yeah,
my mom is turning 85, next
yeah.
weekend, actually. Hi, mom. So she so she
She's
is
fell asleep by now if she's listening,
yeah,
so yeah.
no, but technology is not her strong point, right? So she can't access
Of
her
course.
bank on her
Yeah, yeah,
phone.
yeah.
She's upset because the bank where she's at, and it's a big national bank, is closing the branch near her, and she's going to have to travel further away to do her banking. So there is this population that is more vulnerable than certainly us, and we do need to look for ways of protecting and still providing them these services. But it is difficult, and I don't have a perfect answer for that.
Yeah, it's unfortunate. I'm in the same boat with my dad.
Mm,
I wish there was something, some service, something you could just activate that's like
yeah.
an extra layer or something. I don't know. We have so many of these things on the cybersecurity side, like it's just, CrowdStrike, for example.
Hmm.
Although they had a big problem last year, but it's just like it can stop bad thing from happening. It can
Yes.
detect bad thing happening and stop bad thing from happening. And there's all kinds of these things that you can at least, just pay money to help stop bad thing from happening. So,
Hmm.
if
Hmm.
you're listening out there, cybersecurity vendors, like, please make the
Yeah.
CrowdStrike equivalent for stopping fraud. Maybe it
There you go.
exists already. If so, post it in the comments. I don't know what it is. I've been looking for that thing.
But see, this is where I think using the AI and going back earlier in our conversation is, you know, we know there are these deficiencies out there and we have these needs out there. So hopefully, maybe it's somebody listening to this podcast goes, "Hey, I have an idea on how to address this." And because of AI, and again, I said before, I love the idea of AI and this new age that we're in. And I'm now technically part of the older population that should be resisting this a little bit. So I'm excited. So if this AI enhanced development or AI enhanced, business type of stuff. Maybe that is how we protect our moms and dads is there are people out there who have to have ideas that you and I haven't thought of and have them lean into, their entrepreneurial spirit and create solutions.
Yeah, and I think some of the bigger I mean, they're not a bank technically, so some of the bigger credit card vendors out there. So I've always thought of American Express as kind of being like the leaders and the gold standard when it came to fraud detection. I think they have had, and their investment into technology and fraud detection and cyber and stuff like that has been like the leader for a really long time. I think to the point where it drove MasterCard. I can't remember if it was this year or last year. They bought a company called Recorded Future, which was weird when I heard that because Recorded Future does threat intelligence. So I'm at the cybersecurity conference and I see, wow, Recorded Future got bought by, did I hear that right? MasterCard bought Recorded Future? That's crazy because Recorded Future is like the number one really expensive threat intel platform that there is. But it makes sense from the
It does.
perspective of, like, they need that now. Like, there needs to be, and AI is somewhere in there as well, but there needs to be this marriage of kind of traditional fraud detection with cyber, and that's where I worry from the community banks, like, they don't have the ability to invest at the level that
Right.
these bigger national banks do, or at least they should be doing,
Hmm.
and the credit card companies do. So I don't
Hmm.
know if there's like they can pool together if there's like, federations of community banks that they talk to each other and they can come up with, common solutions for tackling some of these things. I'm sure they probably do that, but
I think I think that is starting. All states have bankers associations. I know for a fact over the last 3 4 years, there's been a increased conversation with CTOs and cybersecurity and how to protect data. I would say it's been data centric more so than how do we protect the moms and dads out there. So I think the seeds are planted there. And when I said this earlier, that from a regulatory standpoint, it usually requires some sort of event or crisis. Hopefully, the regulators will be proactive. I don't know if they will be or not, but it may take some like widespread fraud where somebody hits it out of the park and over, a week, 20 million accounts get, wiped out or something like that, that, would then, kickstart the regulators into this field. But I think there's momentum there. I know that this is being discussed in the boardrooms and, the management committee meetings. I don't know what practical solutions, technology solutions are out there to fix everything, but I know it's being discussed.
yeah. I don't know. I don't believe regulation can save us in this case. I think it's too slow and they don't understand the technology, right? Like whoever's passing the laws, things are moving too quickly and like they don't even understand the basics about things, it seems. M- Maybe if you implement just basic cybersecurity frameworks that are already in place, like the government has things like CMMC, stuff like that. You could maybe, and I know banking has its own things as well, but I think even if it came to some event like that happening, it would just be, how would you stop it then? It would be like an avalanche of things happening. They would be forced to just shut everything down. They would have to have some kind of fail safe or just literally all the money would just like overnight go away. It's just,
Well, and that event
yeah.
may have already happened because,
Don't say that. Oh
well,
man.
I think what we will see over the next, say, 12 months is hopefully more prosecution in and around the fraud with the PPP loans that were part of
Mm,
the COVID Recovery Act. These were forgivable loans that if you, the business owner, you could borrow money from an institution. It was backed by the federal government, and if you retained your employees, this loan would become forgivable.
right. Right.
If you want to talk about wild west, that was it, right?
Yeah.
And
Free money from the government. We'll just say what we need to say, and then
yeah, and there's a case
then
that's
they have to catch us later. Yeah.
well, yeah, and there's a case. I'm trying to remember their name. It was like not Blue Swan, and certainly not Blue Origin, but a company out of Arizona that became a consulting service to help business owners get these PPP loans. My guess, and it's a husband and wife, and I think they're both smart, and things just got away from them. But they figured out the algorithm for approvals, so it's like they submitted thousands of applications right under the threshold. I think it was $149,000 because at 150, it was going to be an audit trail. Below that, it wasn't required. And so I I think when we talk about lending specifically and tools that can be used for fraud detection, we've spent, half an hour talking about how to protect at the other side of, a banking relationship. I think we will probably see some banking regulations about the front end lending and whether it's verification or, I'm not sure what it looks like, but I don't think that that is the only instance. In that case, it was, people playing the system. I think there's, probably $1 billion out there that went to non-businesses because people figured out the system. So I do think in some ways an event may have happened, but there's just been so much other static in the world, it hasn't really reached, you know, rule makers yet. One thing I would like to touch on, because we were talking about small business and you're a business owner, there's another tool out there, especially after hearing, your arc of starting your business and your growing pains. It's in every state. It's called the Small Business Development Centers. Usually they're associated with either community colleges or universities. They it I will say that it does tend to vary from state to state and frankly county to county, but they are a huge free resource for business owners where they can help you develop business plans. They do a lot of small business management skill training, a lot of technical assistance there. They can help match you up with lenders, based on, what industry or where you are on your business life cycle. So that's another, in my opinion, too well kept of a secret for small businesses. And so for your listeners out there, if you're wanting to grow a business, another great place to start.
Yeah, that's a great resource. Thank you. Yeah, we're kind of a special snowflake in just that we're a small business, a family business, but we also operate in the tech space. And it's unusual to have, a self-funded, privately owned business in the tech space. Usually it's VC type money, right? Because tech things move quickly and all of that. And I went to a conference recently and, was going around and look at all the booths and just ran into somebody and was talking to him about our business. And he was stunned as I explained to him what we did and how long we've been in business. He's like, that's incredible what you've done, because he says, just look around the room here. Every one of these companies is exactly the same. So they're VC funded. They're basically just selling variations of each other.
Hmm,
They're these SaaS products,
hmm,
cybersecurity, a lot of them SaaS products, slight variations of each other. He said probably 30% of them won't exist next year, 50% or more won't exist in 3 years. And that's just the cycle. They're all kind of recycling and doing the same thing all over again. So for you to have a family business that's not VC funded, that you're stable and profitable, he's
hmm.
like, good job. So
Yeah,
I
no,
somehow,
absolutely.
managed to get there despite all the craziness and whatnot that we went through. But yeah, it's been,
That's awesome.
yeah.
So so out of that 30% gone and 50% gone, what do you think the failure rate versus the being bought up by a larger organization is? Was he saying that would be like the failure rate, or are some of those being acquired by bigger, organizations, companies?
I mean, the failure rate's at least 50% for VC funded tech companies. I think
Wow.
it's I think with AI now it's going to be more, right? Because they all are looking for the unicorn is the
Yeah.
thing. So you invest and you want at least 10x, hopefully 50x or 100x out of it. And they just do the math. It's like,
Mhm.
I'll invest in 10 companies. I know 9 aren't going to get there. Maybe, one is going to take off. So whether I have to invest in 10 or 20 or 30 in order to hit that. Yeah, it's with all the AI companies out now, and then even the cybersecurity companies, this last conference, RSA conference in San Francisco,
Hmm.
suddenly transformed. It's like I went the previous year, they're all just cybersecurity companies. Now they're AI companies. It's the same company, but now they just tack AI onto it in order to do marketing. And
Yeah.
everyone is doing some AI to some extent, but who knows how much of it is a bubble, how much of it is real. But I think a lot of the AI startups, there's going to be a higher failure rate for sure, because just a lot of them don't really know what they're doing and don't really have a lot of value. They're automating things that are of low value in some ways to start with because that's easy. So I don't know. It's gonna be fascinating to see how it all plays out. So yeah.
That's what makes life interesting.
Yeah. It sounds like on the board of these CDFIs, they would need people like me, people
Absolutely.
that have experience in the field, whatever their domain expert is. So when you have a company come in, that's a tech company,
Hmm.
and not just a restaurant or kind of, more of the average kind of companies that they're used to dealing with.
Yeah.
They would have a little more of an angle on, you know, whether this would be a good company to invest in or not. So,
Absolutely. And that's one of the benefits I think with CDFIs is the loan committees and the boards can be more diverse as far as backgrounds. Most are business owners or former business owners. You always want to have a couple bankers in the room, and usually have to kind of bring them
yeah,
out of their typical banking risk tolerance and try to ease
yeah.
them into what this risk
It's
tolerance
like
is.
Shark
But
Tank, maybe.
CDFIs
I don't know.
are wonderful organizations for, and
Yeah,
again, it's for this kind of what I would call pre-bankable companies. Not all startups or not all young companies have to go the CDFI route. Depending on the company again, with the right business plan, with the right character of the business owner, and the ability to articulate why you, the business owner, can execute your business plan like you've laid it out, which is your source of repayment. There are banks out there. At the end of the day, banks make money by lending it.
sure.
It's their job to assess the risks and manage it. And that's, again, goes back to that relationship. That's why you need to have
Right.
that champion within those four walls
Hmm.
who have your back to help, push decisions into your direction.
Yeah, I think that sums it up perfectly. So, this has been great, Walt. I really appreciate you coming on the show today and sharing all of the, experience and knowledge that you have.
Glenn, thank you very much for having me today. It was a great, great conversation. Appreciate it very much.
All right. Thank you so much for tuning in to Data and Confused. I really appreciate you listening. Please go ahead and subscribe as I get this podcast off the ground. I have a lot of amazing guests planned, industry experts and thought leaders from the tech and cybersecurity world. So look forward to seeing you in future episodes. Thank you.